Joining us now for our trader rundown is Dan Deming of KKM Financial. And Dan, I think that a lot of people will be looking forward to some interest rate hikes in the new year.
I would suspect so. Yeah, the expectation now is for 2, possibly 3 in 2017.
So what do you think that will mean for maybe financial stocks or some of the trader plays of the year?
Yeah, I mean, I think it's gonna change the dynamic and continue to shift that dynamic. When you look at the financials, certainly they've had a tremendous run, but you would expect that any type of interest rate hike moving forward would still be beneficial to the financial sector as a whole. So yes, I do expect the financial sector, as long as that continues to be the case, that those rates continue to creep higher, that they should benefit.
Is there anything that you would stay away from in 2017?
Well, I think the jury's still out on the healthcare, because of the fact that there could be some sweeping changes there. So you've seen the healthcare sector come under some duress here, and I think that could continue, into 2017.
Do you think the market will be very volatile, or do you think it'll be a smoother year?
That's a great question, actually. I really do think that that's something that really needs to be touched on moving into 2017, because if we do see normalization in the interest rate environment, that's going to open up the market to susceptibility to more volatility. Volatility's been somewhat suppressed the last few years. Now we've seen dramatic spikes, but we've seen it get washed out of the market very quickly because of the low interest rate environment that the market's been operating under, and the fact that the Fed's been very accommodative. That's shifting now, so I would suspect that volatility is going to normalize. When we do see some weakness in the market, it could persist longer than what we have experienced in the last couple of years.
And what do you think, up or down for 2017 with the stock market?
I think possibly. I think it's still probably, the probability is higher. The market really has gotten ahead of itself, I think, a little bit coming out of 2016 because of the fact that we've just seen this massive rally, year-end rally. So the valuations, I think, are going to be questioned when we start to roll into earnings season. But ultimately, it does feel like the economic conditions are picking up. You're seeing consumer becoming more confident, and with those trends in place, that should help support the valuations in the market.
Well, thank you for coming on our show.
Thanks for having me, Angie.